So it's 3 o'clock. So thank you for everybody joining us today. So I am Jenny, the CEO of Skåne Startups. We are a nonprofit startup community support organization. And one of our goals is to connect local founders in Southern Sweden to global investors. Because we believe that global investors should be aware of these ambitious founders in our region and hopefully invest in them. And in the office I'm sitting right now, the ground, we have used to sit Mapillary, which was acquired by Facebook, now Meta, and the Modcamp, which is acquired by Cisco Ventures, Castle, a SaaS business, which received investment from Index Ventures. So there are lots of ambitious founders here. And this is why we host a monthly investor chat, so that first, local founders can get access to more global VCs. And second, they can learn about how VC invest. And three, global investors can get a taste of what is happening in our community. So today I'm super excited to have David from Angular Ventures with us. But first of all, I'd like to introduce all of you to our co-hosts today, Carolina, Martin, and Jonathan. Can you just have a quick word about yourself?
Hi, shall I start? I'm Carolina. I'm the venture advisor at Skåne Startups. So to all the founders in the chat, basically, if you have any questions and things about looking for funding in the future, then feel free to reach out to me.
Yeah, and I'm Martin Backlund. I'm from Invest in Skåne. We're the official investment promotion agency for Southern Sweden, the region of Skåne. And I work as a business developer there. And we, of course, try to get companies to Skåne, but we also try to get capital to our growing companies and our startups in Skåne.
Yes, and my name is Jonathan. I think I recognize most of the faces here. I'm from Business Angel Network Connect, with a non-profit with about 500 business angels in our community. So we're Sweden's largest. We work with preparing startups to become investable and investors to become better investors. And then we organize pitch events where in Skåne, about 50 startups each year pitch for the pre-seed funding.
Super. Yes. So today, so today, this is the webinar will last for 1.5 hours, and it will be recorded, and it has two parts. So part one, David will share his experience as an entrepreneur, but also as an investor. And during this roundtable discussion, me and my colleague Carolina have prepared some questions for David. But the founders in the panel, do feel free to raise your hand and ask questions directly to David. And the founders who join us as participants, feel free to write down your questions in Q&A, and we will answer them when there's time. And the part one, we have a few selected founders to pitch. Each founder will have 3 minutes to pitch and have 3 minutes to receive feedback and answer questions from David. So now let's get started. So first of all, just want to say a huge thank you for David for joining us. And we are very excited to have you. You're the general partner at Angular Ventures, is a specialist first check venture capital firm investing in founders, redefining global market. But before we dive in talking about Angular VC and investment in general, we'd love to learn more about you. So can you tell us a little bit about your background?
Yeah, absolutely. Thanks so much for having me, guys. First, let me say that I'm really excited to be here. The other thing I'll note, just for the record, is that I just got off a red eye from New York City, so I'm a little bit wonky right now. So, you know, if I ramble, blame it on that. And if I say something smart, you know, you can give me some credit. So anyway, really excited to be here and happy to give you a little bit more background, you know, on me. So yeah, as Jenny, as you said, I'm one of the partners at Angular. We're a 2-partner firm. It's just me and my partner, Gil. You know, but it's funny because I'm somewhat new to the world of investing. I really think of myself more as an early stage guy, an entrepreneur. So I wear the investor hat somewhat uncomfortably still. You know, that's not how I like to describe myself. so my career has mainly been as, somebody working at early stage companies, in the first 10, 15 employees, or, building, or, building my own business as well. I know we'll get into some of that, so I won't bore you with those details now. I'll just also say kind of personally, so you guys can get to know me, as more than just my LinkedIn profile. I'm an American, as you might be able to tell from my accent, but I'm based here in London. And I actually moved here in January of 2020. So if you do the math, that was like 8 weeks before London locked down, which was a very strange time to move to a new city, let alone a new country, But I moved here with my work at Airtable, and moved here with my wife, and we totally fell in love with the city. So super happy to continue to be here. And I grew up in the States, grew up actually in upstate New York, kind of in the middle of nowhere, and have worked in New York City, Boston, and San Francisco in the States. So that's like a little bit more personal color about me.
Yeah, I would like to hear a little bit more about the early in your career. I mean, you work in a variety of different roles, like account manager at Google, investment associate at VC fund, and you also start your own business. So what are some of the key learnings from those experiences?
Yeah. Well, let me get on. I'll give you kind of a high level of those, so that, and then I can share kind of a few things. So as Jenny, as you mentioned, my first job was actually at Google, where I worked on the ad side of the business. And this was, I had no idea about how any of this stuff worked, like internet businesses, So it was actually an incredibly useful, and I say that because, my undergrad degrees were in history and government. I thought I was going to go into academia. I spent most of my time reading books. That was kind of like my my experience in university. And so working at Google was an amazing experience, because it just it was it just taught me the way that like internet businesses actually run, and it gave me a great appreciation for two things that I think are incredibly important and seriously undervalued, which is sales. Like no matter what your job is, the more senior you get, the more your job is just a sales job, and growth marketing, right? And actually being super analytical in your approach to marketing. So those were like great early lessons from Google, but I kind of realized pretty quickly that I didn't want to work at a massive company. A small, early stage, messy companies really fit my personality better. So, I left to join. I ended up joining this company called CompStack, which is based in New York City. It's a commercial real estate data platform. You could almost think of it as a B2B marketplace, but for data, for commercial real estate data. And I led growth and expansion there for a little over 3 years. We expanded from one city to cover the entire United States, and then we sold that underlying data set that we built. We sold that as an analytics platform to hedge funds and landlords and the like. That was an amazing experience, and made me realize how much I enjoyed the early stage side of things. Like kind of like ticked that box. This is definitely where I want to focus, on for the rest of my career. This is what gets me out of bed in the morning. Ended up after that, ended up bootstrapping a company of my own, which was a hard experience. I don't know if there's any bootstrappers in the audience, but it's definitely doing startups on hard mode. But I think there's for a lot of businesses out there, it's the right way to do it, right? Venture is not always venture doesn't always make sense. Venture is very expensive money, so you should only take venture if it really makes sense for your business. And then, did a little bit of venture investing at a firm in the States called Founder Collective, which was a seed stage fund based in Cambridge, Mass. and New York. Realized that, I was not ready to do investing. I wanted to go back into building stuff. And I had long been obsessed with Airtable as a product. So I was able to kind of weasel my way in and convinced the CEO that I could be useful there. And then, yeah, I was there for a while, and happy to talk about all of those experiences as well. But I'll shut up for a minute so you guys can ask some follow-up questions.
And this is super interesting because you joined Airtable in 2017 as the number 16th employee, and your role was growth and the partnership. Can you tell us a little bit what does that role mean, and what were your main responsibilities?
Yeah, absolutely. I mean, look, I'll be honest. The job at the beginning was incredibly vague. I was basically, my title was just the word growth, right? It was like as vague as it comes. And I was just kind of, I mean, the role was kind of invented, right? Like it was invented to just kind of take some things off the plate of the CEO and kind of help think through some of the central growth challenges that we were facing as a company. So for some context, just like what Airtable was like at that time, you know, we had a fair number of free users who were using the product every day and seemed to be getting a ton of value out of it, but it was pre-revenue, right? We had not monetized anything yet. And another big challenge that we faced at Airtable is that it's such a horizontal product. You know, you can kind of build it into anything. You know, it's a box of Legos that you put together. So another big challenge we faced is we didn't know what the core use cases for the product were going to be. So when I joined, those were like the dual existential questions. Like, okay, well, eventually we're going to turn on revenue. Are people going to pay us? Will people upgrade? And what are the use cases for this product? How can we turn what is, you know, people were using the product every day and they were inviting their friends to it or inviting their colleagues to it, right? But there was no system. Like we hadn't built there was no system we had built, like go-to-market machine we had built. Like we couldn't say, these are the top 3 use cases and we know we're going to be able to acquire more users, you know, that have these use cases. We didn't have that. So that was the other kind of big thing that we wanted to try to figure out. So that ended up being my job, was basically trying to figure those 2 things out, you know, and that was probably the first 2 years I was at the company. That's really what I was focused on. And then after that, started focusing on, basically I built kind of like the first growth team to work on those problems. And then that team kind of dissolved naturally after a year and a half, 2 years, and split to become the product marketing team and the growth marketing team and like the biz ops, sales ops, rev ops team. Because it turns out those were the things we were doing, but we just didn't have those teams. We were kind of doing them all. So then we grew up to be a big enough company that it made sense to split those all up into separate teams. And then I continued on and scaled up partnership stuff. So that's like a really high level of what I was working on, but happy to go into detail on any of it.
And so the founders in the panel list, feel free to raise your hand and ask questions. And for founders in the audience, feel free to ask questions in the Q&A. Thank you, David, for the answer. I'm just curious if any questions from the founders in the panel list regarding growth and the partnership. Yeah, Melanie, please.
Hi. I can definitely resonate to that starting point. And one of the things we're battling with is, you know, you see a lot of companies that open, I guess Airtable is a bit more B2C, but I guess also could be B2B, but we're kind of struggling with this. Do you have like a demo request and you like slowly select people on and hope you get some really good fit, or do you kind of automate it, get as many people as possible and hope that the numbers give you something good, because you just have so much math coming your way? And this is something I'd love to hear more on your thoughts about.
Oh yeah, that's a really good question. So look, I have a point of view here, but it's, as with everything I will say, it's heavily biased based on my experience at Airtable, right? So, you know, put lots of pinches of salt on it, right? So we opened things up at Airtable, right? It was a freemium, it's a freemium product, and there was a free tier always. So we had thousands of people who had accounts, right? And very few of them were using Airtable every day, but that you could freely sign up and start playing around with the product. Now, I think that ended up being useful for us, but there's a specific reason why, and that might not be true, Melanie, for your product. The reason it was useful for us is because we had this, as I said before, we had this really horizontal product. We didn't know what people were going to use it for. Like, we didn't know what the good use cases were going to be. So it was really useful to have as wide a top of funnel as we could possibly get, just so we could capture as many potential use cases as possible. So a lot of what we did in the early days is we have thousands of people using the product. We would look to see who's actively using it. And then we would go talk to them and ask them to demo what they built for us. Like, because we have no way of knowing what you've built without talking to you. So we try to convince you to talk to us and then convince you to show us what you've built. And that's how we realized, oh, this use case is actually really, like, Airtable's really good for this. We had no way of knowing otherwise. Right. So having a really wide top of funnel was valuable for that, for like use case identification and prioritization. Now, I think that if you have a different type of product, right? If you're more targeted, if you know exactly who your ICP is, you know what you're building, and you just need like consistent iterative feedback from a customer or a small set of customers to be able to like learn quickly and move quickly, I think there's a great argument for saying, let's just keep a wait list up and choose a few design partners who are on board with providing consistent feedback and have signed an LOI or whatever, like done something to show that they're committed to that. I think there's huge value in that approach too. So hopefully that distinction makes sense.
I'm just curious, like, were you also raising funding at that time? Because I feel like not knowing your use case and having a very wide top of the funnel is not what investors want to see.
Yeah. So at this point in time, we weren't raising any funding. It was, we were kind of like in between. It was basically post, I mean, it was, this was a different era, but it was post seed. But it was, I guess you could say it was post your first check. It was post first check. It was kind of burn was really low, and we were just kind of building product heads down for years. So that's kind of it's somewhat rare these days, honestly, to think about it. But this is true for a lot of companies that kind of broke out in the 18, 19, 2020 time horizon. A lot of them were founded in 2012, 2013. And they basically like built product in obscurity for 4 years and then slowly started, but that's true of Airtable, that's true of Notion, that's true of Zapier, that's true, like the Webflow is definitely that way. Like there's a bunch of these types of companies that were all founded around the same time. It took a while to break out. But anyway, to your point, Melanie, we benefited from the fact that, burn was low, we had money in the bank, so we could try to, we could be patient, and the story that we were trying to tell was less, it was less about, we found this one use case and we've built a repeatable, machine to extract value from this use case. And it was more about telling this story of, this is a broad horizontal product and look at all these different use cases, right? We were telling a different story. So that's why we approached it that way too.
Thank you.
Thank you so much, David, for the answer. Now I would love to know a little bit more about the Angular Ventures. It's a relatively new fund, and your team closed the first seed fund of $41 million back in 2019, and that took nearly 4 years. And most recently, last year, October, your team closed another fund of $80 million. And then you joined the team Master GP. So huge congratulations. So can you tell us a little bit more about the Angular Ventures and what's also made you decide to join them?
Yeah, sure. So, all credit for everything you just said goes to my partner, Gil Dibner. So he's the one who raised the first fund himself back in, 2014 to 2018. I've heard the stories about how, challenging that was and the amazing amount of grit and perseverance he brought to that. But I was not there. wasn't there to experience it firsthand. But some background on Gil, because I think his background actually provides some good context on the firm overall. So Gil is also an American, but who happens to be based in London. But he spent a lot of his professional career in Israel, investing, as a VC in Tel Aviv. So he did that for 10 plus years, and then was recruited to come over to London, and recruited by Index to come over to London and work kind of scaling up their seed program across Europe. And then kind of, basically the way he would tell it is he kind of saw that there was a lot of similarities to the way that folks invest in Israel, which and could be brought across, like that style of investing could be brought across the rest of the UK and Europe. And a lot of that style of investing, for what it's worth, is looking at companies that are like deeply technical and thinking about go to market in a decidedly US centric point of view, right? Like, or more so a global like point of view, right? You see this in Israel, it's quite obvious, right? Because if you build a company in Israel, your market is not going to be Israel, right? It's too small for that to be your only market. So you're building globally from day one. Like, you're always thinking about other markets that you're building for. And that same approach makes a lot of sense across, any enterprise B2B, company, because 50+% of all enterprise spend globally comes from the US, right? So like that market just matters, like, and it's homogenous too. So if you're able to kind of, nail it, then you have half of the global revenue that you could probably, acquire is in that one market. So it's worth going after. So anyway, he kind of took like that idea, right? This like that angle, and said, I think that we can be sector specialists, be really focused on B2B and enterprise, deeply technical founders, but geographically much more broad. So we don't need to be, there were a lot of firms that are, sector specialists or country, like super sector specialists or super like geographic specialists. They only invest in, Israeli companies, so they only invest in UK companies, or they only invest in like AR or VR companies or something like that. And we felt like this balance of saying, hey, we can invest in all enterprise and B2B because they're actually quite similar, right? There's lots of ways that these companies are the same. The go-to-market motions are similar, all of that, but we can invest across the entire region. That might be a really interesting angle. So that's the kind of I'm sure somewhat, bastardized version of his original, kind of pitch that he was giving back in 2014, 2015, when he was raising that initial fund. And the first fund, he's had, amazing success with it. There are some really great companies that have already started breaking out, which, I mean, you can go to the website and see. But there's some amazing ones kind of across the board. So he raised the second fund, which is now about double the size, an $80 million fund, just a few months ago. And I joined kind of alongside with that fund. And I'll say that another question you asked, Jenny, was why join Angular? And it's this is a question I thought a lot about, because I wasn't sure exactly what I wanted to do. I had left Airtable, and I knew that I wanted to get back to early stage. Like, that is what had pushed me to leave, because at this time Airtable was, it was over 100 million in ARR, right? It was over 600 people. It was just a big company, and there are lots of interesting challenges, but they're all big company challenges, and I was just less excited about those. So I knew I wanted to get back to early stage, but I didn't know exactly how, I wanted to do that and what that was going to look like. And so I talked with a lot of founders, and I talked with a lot of, big multi-stage VC firms, and then I was talking with Gil at Angular, and ultimately I was really convinced by the idea of joining Angular for a few reasons. One is that Angular itself is an emerging fund, right? Like there's a lot of building to be done. Like we're trying to build our brand, we're trying to build this business. And so, I was like, look, if I'm gonna do investing, I at least want to do like the most entrepreneurial version of investing, which requires us to like, we need to build stuff. And, I'm also like trying to figure out what our office space should look like. And I was putting together my desk on the first day. Like I'm doing all of that stuff too. And that's the stuff that I love. And the other thing is, Angular is truly early stage, right? Like we really invest, we try to be a first check firm. And so that really resonates with me a lot, like that type of investing. And also we're kind of low volume, high conviction investors. We make 5 or 6 investments per year and that's it. And then we're like deeply partnering with you. And that is all we focus on. And that's kind of the version of investing that just resonates with me most, right? As early as you can, like low volume, super high conviction, that feels like it's the type of investing that speaks to me. So that's kind of the quick background on Angular and why I chose it.
Super interesting. And when you're talking about the high conviction, and your team has written many different articles about what you believe in enterprise and deep tech. Can you just elaborate us a little bit what kind of enterprise and deep tech company that you're looking for and why?
Yeah, sure. So one thing I'll say just at a high level is, we're looking for, we're basically, like a better way to describe what we're looking for is to describe what we are not looking at, like what we don't, look at. And what we don't look at is anything that's super consumer. If it's consumer driven, then that's not our cup of tea. Or if it's a little bit, or if it's technical in ways that we can't diligence quickly. So, something like biomedical or pharma or something like that, which just isn't in an area of expertise for us. But if it's anything within the realm of B2B, if you're selling to a sophisticated buyer, then we're on board to understand it. So that's still pretty broad. And I think we kind of do that on purpose because a lesson that I learned from working at Founder Collective, which was that seed stage fund I mentioned, is that, if you try to be, when you're an early stage investor, if you try to be too thesis driven, you can get yourself in trouble because oftentimes, because let's be honest, like you're not being paid to invent the future. Invent what is going to matter 5-10 years from now. That's what the entrepreneurs are doing. Like the entrepreneurs are the ones who are inventing the future. You're paid to try to like find those people and support them and invest in their companies. And if one way to visualize this is if you go into Google Trends, like Google Trends search, right? And you search for some of like the classic trends of the 2010s, right? So maybe like car sharing or something, right? If you look at when car sharing peaked, so when probably every VC out there was like, this is a trend that I want to invest in, is car sharing. If you look at when it peaked, Uber and Lyft had both been founded like 5 years prior, right? Like the companies that are going to make outsized returns and change paradigms, they always look completely insane, when they're started. So as an early stage investor, I try to keep that in the back of my mind always, which is like, we're looking for some secret insight, right, about the world. We're looking for somebody who believes something that nobody else believes. We're not looking for something that just reinforces, a thesis we have, because we're not the entrepreneur. We're not the inventor. We're probably wrong. We're probably 3 years off, at least. So that doesn't give you a specific thesis to pitch me on. I fully recognize, but that's kind of the point. I'd rather just hear your your secret, the secret insight you have about the world.
Thank you so much, David. Carolina.
Yeah, it was just following on from the point you just made, like how, if you're looking for people that are, I guess, thinking a bit differently to you or not necessarily fitting your own mindset, but are maybe visionaries in other ways, how, like, what criteria are you using to actually select then whether you see them as a good investment or not?
Yeah, it's a good question. I think that there are questions we always try to ask each other. Like when I say each other, I mean Gil, my partner Gil, and I, that we try to push each other on. Well, actually, let me step back and say there's a few things that matter. I think one thing that matters a lot, especially early stage, is it's useful to remember this is it's a people business. Ultimately, like, you're signing up to work with these people for the next 10 years of your life, let's say, if everything goes well. So I do think that really matters. Like, I think I always, the companies, the founders that I speak with, that often ask like what our investment process is. And I say, like, look, like, it's just me and my partner. There's no investment committee, right? Like, there's no bureaucracy. We can move quickly, but also, I want to get to know you, and I hope that you want to get to know me. Like, I think actually that process is just really important. So that's one thing is, I think having like a personal fit is a like necessary but not sufficient condition, for working together. So that's one thing. I think that the other thing that like my partner Gil and I will kind of push each other on is we'll ask, like, what type of risk do we feel like this business is taking? Is there some technical risk here? And are we not sure if this technically is going to work? Or is there, some sort of like market risk? Do we not know if there's a real market opportunity here? Is there some team risk? Like, we don't know if these are the right people. We'll try to think through really carefully which of these, what the risks are. And then we just try to question, like, do we believe that that's, that is a risk worth taking? Like, do we think we can price it and feel comfortable with it? Because ultimately, every investment that I get really excited about, it's always one where it seems like that where the founders have, it's kind of what I was saying before. It's like the founders they believe something that nobody else believes, but somehow they've convinced me of it too, and now I'm starting to believe it. And that's what's really exciting, because then you start feeling like, okay, we're in this together. We both believe this crazy thing that nobody else believes. How could we convince the next round of, investors? How can we convince them that actually what we both believe is true? So ultimately, I think that's what that's the feeling I want to get, with founders that I work with, is that we're kind of we're in the corner together and taking on the world,
Super exciting. And David, like, one of the challenges for early stage founders that they often, they might not have found the product market fit yet, and they're still exploring different use case in the market of verticals. You actually written an article about how childhood will affect the entrepreneurship. You talk about exploitation and exploration.
Oh, right, yeah.
So what kind of advice you offer to founders when they're in that stage? And also, what kind of growth do you expect from founders within 6 to 12 months after you make investment?
Yeah, so good question. Like, on what do you expect post-investment? I think that, there's no one size fits all answer to that. I think it completely depends on the specific company and what hypotheses you need to prove. Like, what are the key assumptions or key questions that you need to answer or de-risk, about the company. So I think that it's hard for me to say, like, these are the specific metrics of growth that matter, because I don't think there is an answer like that. Instead, what I would say is, at a high level, what matters is after you raise money, it's a really good time to step back and say, okay, what must be true? Like when we go out and raise our next round of financing, what must be true when we go do that? Like what must we have proven for it to be a really successful financing, and agree on that, like figure out what those things are and what are the proof points and what are the KPIs related, the evidence related to those proof points. Figure out what those are, align on those, and then execute. I think what you'll find is, especially early on, you get a lot of credit for learning. So maybe you haven't figured it all out. You probably won't in 6 to 12 months. You won't, you won't have perfect product market fit at that point. But if you can show how much you've learned, how much you've shipped, like you've shipped a lot of product, you've learned a lot of stuff, in that time, and that you're kind of executing really well, then I think you get a lot of credit for that sort of work early on, because I think that, ultimately, I forget who the investor was that said this, but they talked about how entrepreneurship is it's like turning over cards, and you're trying to find answers. So you're just like, all answers to all these questions, turning over cards. And investors want to see the answers on the other side of the cards. Like that's all they care about. And your job as a founder is to figure out what is the right order to flip over the cards? Like what's the right order to answer questions, so you can kind of construct a story, and you're doing it in you're finding your way through the maze, to build this business. Yeah.
Thank you, David. I think one of the things that all the founders here are very interested in is growth. And when you started Airtable, you mentioned it was one of the most vague and the scariest job title you got yourself into. So what kind of advice would you like to offer to early stage founders here today who are building their growth strategies?
Yeah, great question. So I think one of the challenges with building growth teams early on is you don't necessarily know what channels matter. You don't know what tactics are going to be useful or important to you as a company. So, it's hard to, so it can be scary to go hire some specialist, right? Like if you go hire a growth marketer or a content person or whatever it is, what do you do if you actually growth marketing doesn't matter at all for your business, or if content is not important? So there's kind of this, there's a really tough in-between phase, which I often find, where a company's kind of grown up, the founder, the CEO is basically the head of growth, right? They're the ones who they're doing everything. And then they get to a point where they can't do it anymore. They need some help. They need to get that part of their brain and put it in, and give it to somebody else. But they don't know what to focus on, and it doesn't make sense to hire that specialist. So they're trying to fill that gap. And that was kind of the role that I was hired for at Airtable. It's like this growth generalist, basically. It's like you have experience across all of this stuff, and you can just kind of help us figure out what matters, and then hire your backfill. Me being successful was spinning up a growth marketing strategy and then hiring somebody to do it 10 times better than I did. That is success. So you want to find somebody that has that mentality, that's willing to give away their Legos, right? They don't want to build a fiefdom, right? Their goal is to leave with fewer responsibilities than they came with. So that's often my advice when talking about early growth, is to, once you're getting to the point where you as a founder are kind of overwhelmed, try to find somebody like that who can kind of be your experimenter in chief and figure out what channels matter. Unless, of course, you already have proven out, and that this channel matters for you, and then you can double down on it, which definitely happens too.
Yeah, thank you, David. We still have a few more minutes for questions, so feel free to raise your hand. And I have one more question. Actually, in your most recent article, you talked about stay focused is advice, the founders often hear. But you wrote about building a compound startup might be the next great non-obvious SaaS play. And arguing stay focused view might be outdated. So can you tell us a little bit about that?
Yeah, so this was kind of inspired by this talk that the CEO of Rippling, Parker Conrad, gave at, I think it was a Startup Grind event like a few months ago. And I watched this video and it's like criminally underwatched. There's like 1,000 views of it. And it was so interesting. So I figured I would write a little post about it and see if we can't get the view count to, like 1,100. It's not like I have a huge following here, let's be honest, but, get the numbers up a little bit at least. And so anyway, I would totally recommend watching that. If you search for Compound Startup, I think you'll find it. I would totally recommend watching it. But, basically his premise, which I think is and I've noticed this as well, so it really resonated with me. And this is kind of a story I tell in the piece, is that, I have a friend who was actually one of the early salesperson at Airtable, was now starting as the VP of sales at another company. And, he's figuring out what tools he wants to buy for the sales team. And he's buying, it's like a laundry list of tools. It's crazy how many different things he's bringing on board, to the point where he did the math, and now like the cost per rep is going to be $300-400 per month per rep on the team, just for like SaaS, just for sales related SaaS tools. And that just seems kind of crazy, right? And you look at that and you're like, man, has the pendulum swung such that we were just so overtooled, and there's so many, there's so many pieces of software going after so many wedges, increasingly narrower and narrower wedges of the market. Is the pendulum going to start to swing back towards like, product portfolio type companies? But of course, it's useful to remember the reason we got here is because those big product portfolio companies were like bad, right? Like a lot of the modules were terrible, and they were, that market share was stolen by point solutions. So this is a pendulum that swings back and forth. But the premise of the article is just kind of questioning, like, maybe the pendulum is a little bit too far in this direction, and it's going to start swinging back. And I think I wonder if this resonates with the founders in the audience. Like, I feel like you often see this when you're trying to sell in. You built some SaaS tool that you're trying to sell into an org at a company, and like they're hit with. I remember this happened at Airtable. We would talk to some of our customers, and they would hire a new CIO or something like that, and the CIO would say, okay, we need to cut 30% of our subscriptions, like 30% subscription cost reduction. And it was somewhat indiscriminate. It was just like, there was no way we should be spending this much money on random SaaS tools. Cut 30%. I don't care what we cut. We just need to cut 30%. And I feel like you're seeing this, a lot, where it's just really hard to it's really hard to sell into an org that just feels so overtooled and overbought. So anyway, that was kind of the high level premise of this blog post that I wrote. And the kind of question I was posing is like, well, maybe there's actually an opportunity now to build like the next generation of these product portfolio compound startup type companies, where the approach from the beginning isn't to build a super point solution, Uber focused, right, SaaS product. But the goal is actually to own like a foundational data layer, to own a whole business process, right? To just like to do the hard thing, and say, we're not going to do the narrow thing. We're going to do the big, wide, hard thing. But we think what we benefit from, like, yes, we're going to lack focus, but what we will benefit from is a superior customer experience, because we're centralizing a lot of because now you don't need to deal with, connecting all these different point solutions and all of this. Instead, you'll get like the same data will be accessible across every product in the portfolio. It's seamless, it's easy, it's better. That's a premise. I'll be honest, I don't know if that's right. I think it's an interesting thought experiment, at the very least.
Thank you so much for David. And we might have a few more questions later on, but I think
Sure.
Now's the time to start the second part, the founder pitch. And I think the first founder will be pitching is Will. Feel free to share your screen and then you can start.
Okay.
There's no break in between. Sorry, guys.
Okay, I shall attempt to share my screen. Okay, can you see that?
Yes.
You can't see my speaker's notes.
I cannot see your notes.
Okay, so our company is called Nologram, and we're building a medical device success platform called Reconnect. It is a B2B SaaS platform. Yeah, it's changing. To communicate our goals as a company, it's important to understand the industry. What we're talking about is medical devices produced globally by medtech companies and used in hospitals, wards, and laboratories. And when those devices are sold on the international market, they go through a very specific procurement chain, which inevitably leaves a significant gap between the innovator and the user of the product. So once a device is in place in a healthcare facility, the medtech company needs to, for example, gather feedback, report adverse events, and collect post-market data. And the healthcare professionals, they need to get training and assessment for the devices, they need support for solving problems, and they need ongoing maintenance. So in summary, that's a combination of both product and user success. Our solution is called Reconnect. It's a platform that can facilitate the successful deployment of a medical device to a healthcare facility, provide ongoing services and support, and ensure high quality patient care is achieved with that medical device. Our platform includes a variety of features listed here: 360 product view, a product knowledge hub for training and assessment, 360 user view for customer management, and a feedback loop. The amazing thing about this is that Reconnect actually maintains the network of individuals who participated in the sale of a medical device. This will also reduce the impact of the geographic distance and time zone between the innovator and the product user, and essentially close the gap between those individuals. 2020, we built a paid prototype platform with a company here in Sweden called Solutions for Tomorrow, and it's operational today, serving their customers around the world. And we are currently testing an MVP version of Reconnect with 7 different medical companies from the Nordics. We have a team capable of delivering the platform and understanding the needs of medtech and healthcare professionals. And most importantly, over 8 months, we've consistently met our targets. We are working on building a pricing model that will be able to be accessible for micro medtech companies all the way up to the market leaders. And the average cost of the recurring monthly subscription will be 1,500 euros. Because of changes to the medical device regulatory frameworks in Europe, that presents us with a great opportunity to access what is essentially 95% of the SME market in Europe. And that's a potential annual recurring revenue of 417 million. We're raising 5 million SEK and opening in Q2, closing before the end of Q3. And we will use that to acquire and maintain customers whilst building the team and developing the product with marketing and a brand launch. That's it. That's my pitch. I welcome your questions.
Thank you, Will. Yeah, David, feel free to offer some feedback and ask questions.
Yeah, awesome. Thanks, Will. That was really interesting. I have a few questions, and I don't know if it makes sense for you to answer them, or I can just ask the questions, and then you know that I'm thinking about these things.
Okay.
So one thing that I was thinking is, what do best in class med tech companies do to try to solve this problem now? So is there, is this a problem for all companies, or is this like the best ones have actually figured out how to solve this, with some first party solution, and you're kind of bringing that to the rest of the market, or something else?
Yeah, I think if you look at the middle of the market, what they will do is kind of what you were describing earlier, is use a whole variety of different SaaS solutions, which combine together to create kind of customer product success. At the top of the market, the biggest players, Siemens and Philips and these kind of big fish, have the capacity to build software themselves and have in-house software development companies. And they also rely very heavily on the in-person training format. But what we see as the greatest opportunity is the kind of the growth SMEs who are, kind of hitting market access.
Right. Okay, so that's like a key thing you need to believe in here, is that there's like this middle growth market, in med tech that will be growing. And then the other question I had was just technically, like, how is it implemented? Do I need to have, if I'm the med tech or the med device manufacturer, do I need to actually build something into my product, or have a certain operating system, capability to be able to take advantage of this? Is that standardized or no?
No specific requirements. It's out of the box, so it can run. It's a SaaS kind of built on Microsoft Azure, and it's got it has the potential in the future to be a kind of built into their platform, depending on that the capacity of that. But it's also we've limited the amount of our need to customize for a customer. So that they have in-platform customization, so that they brand their platform for themselves to communicate out to their customers and their product users. So it should be very easy for them to set up and deploy.
Yeah, gotcha. I realized I was asking that because I was curious if you were able to see, if you would be able to have visibility into all of the potential issues, technical issues that a medical device might be running into. Like, do you get that visibility just being loaded on to the platform, or do you need to like be on the chip, to see like to get visibility into some of the things that the medical device manufacturers might care about? It sounds like the answer is no. Like, you at the software level, you have enough visibility.
What we rely on is the individuals in the hospital or the healthcare facility who use and maintain the device to report issues and to create the data. But we've already spoken to an IoT company who have that IoT device dongle to connect to a medical device, which would allow us to collect product data, device data, and add that to our platform. And we can see a whole range of future possibilities and avenues which could be really valuable there.
Gotcha.
Thank you, Will.
Okay,
thank you,
cool.
David.
Yeah, sorry, I'm taking too long. Thanks, Will.
It's okay. Okay.
Yes, we will have Penya next to present. Feel free to start.
Sorry, I was trying to figure out how to unmute myself. Can you see my screen?
Yes.
Can I see my screen is the next question. Okay. Everything is frozen, sorry.
Oh, no problem.
I have to do this again. Everything is frozen. Can you see my screen now?
Yes.
Okay, great. So community is becoming increasingly essential for running a business, and in fact, 33% of organizations now have online communities of over 10,000 members. However, despite an increase in community-related products, few are actually designed with an understanding of how live communities function and grow. In fact, 56% of community managers are not very satisfied with their community platforms, and people are frustrated by confusing interfaces and miss that sense of belonging we feel in face-to-face communities. So we created Panion. Based on research with over 300 community managers, our user-friendly platform helps professional communities create safe online spaces that build trust and inclusivity, knowledge sharing, and meaningful connection. Our platform is designed to prioritize people over content, with a keyword searchable member directory and a design that encourages positive interpersonal connections. Unlike our competitors, we offer a mobile-first design using geolocation and keyword tagging to help members find relevant people within a large global network. And due to popular requests, we have also designed a mentorship matchmaking tool and have tested it with hundreds of community managers. There are currently no other community platforms offering this solution. And we are seeing a lot of excitement for what we are building. In fact, we're the only pre-seed company being compared amongst community managers to the top players in the industry. Our journey began in 2019 when our team launched a B2C friend-making app and within a year achieved strong traction with little paid advertising. During the pandemic, we took our already validated networking features and built an entirely new community management platform on both web and mobile. We already have a number of companies in our pipeline and have selected a small group of networking communities with whom to pilot our product. And through much experimentation, we've also started to identify the most relevant marketing channels. Our monetization strategy includes 3 different revenue opportunities: a tiered subscription model for different sized communities, commissions on paid events and membership fees, and an enterprise solution with increased security and additional integrations. Luckily, I'm not doing any of this alone. I have a highly diverse team helping bring Panion to life with expertise ranging from design to development to data science to marketing. I myself have a background in anthropology and filmmaking, have worked for Apple for 3 years, and run 2 previous media companies. And we're also supported by a number of instrumental investors and advisors who've been helping us along the way. And these are just a few examples. We've built this foundation with only 550,000 euros, so imagine what we could achieve with 2 million more. We're raising a seed round so that over the next 18 months we can build new features, expand our team, and increase our marketing budget. To truly understand the power of what we're building, I'd love to give you a demo of our product.
Cool. Awesome. Thank you, Melanie. I want some like quick, top of mind feedback and like things that I'm thinking. One is I love that the idea came from the B2C like friend networking thing. I don't know how to describe it exactly, but I mean, I love ideas where there's some like you get some insight from somewhere else and then you bring it into a new area. Like I feel like that's always such a great story and such an interesting way to find a wedge in that nobody else would see, right? And you guys had visibility that other people didn't have, so that's interesting. And I mean I definitely think I resonate with the high level stats at the beginning, that people aren't satisfied with existing platforms and all of that kind of stuff. I think the question that I have is around like differentiation in this space. It's just like, as you mentioned, right, you listed you had a competition slide and you were looking at the comparison to other players as well. There's just a lot of players in this space, so I'm curious how you're thinking about not just differentiation now, but like sustainable differentiation. Like are you able to, and another way to ask the question is, is where this goes, like, will eventually every platform just have all the same features, and they all have like different wedges in, but then they kind of just they try to expand to capture more and more use cases and more like types of communities, and then eventually they all look the same, right? And you're just kind of fighting. Is that how it'll look, or is there some sustainable kind of like competitive advantage you can build by wedging in a particular way?
Yeah, I think that because we are getting people from the competitors coming our way, frustrated by Mighty Networks, Circle, all of these. And I think it's because they're selling a product to their members, and the feel of the product is really important, and the user experience is really important, because they don't want to give something, they're selling them their own business. So I think what the feedback we're getting is that a lot of these products are very much cookie cutters of social media. It is about content. It's about posting
it's all the
things. And
feed.
and this sense of like who's in the community, who's behind that content. It's not in any of them. They're all looking the same. And I think that what differentiates us is the amount of user research that we do. The fact that I have a background in anthropology. I'm approaching this in a very like ethnographic way. And also the design. Like, people are very attracted to the fact that design is important to us, because design is important to how you're presenting things to your customers, and that's what's lacking. I think the problem is that actually people are like, oh, you don't have as many features as, say, Mighty Networks, and we're getting lost in all those features. You just like narrowed it down to the simple needs of what we want, and that's connecting people, and that's kind of what's missing. So I think it's a feel, and I think it's a expertise in knowing how to like distill everything people are saying into what they really need, and then building just that. And overall, like, the feel of the product is what is attracting people to us, and the fact that we're really into mentorship and matchmaking, which is not really something we're seeing very much in anything else.
Yeah, I imagine that Jenny is going to say we have to move on, but the other thing I would ask, or a comment, I guess, is I'm really like, what I'm thinking about then is, what is the market, like, how should I think about the size of the market for communities where matchmaking is kind of a critical differentiator? Because those will be that's like your first target market. Maybe you can expand from there, but what does that initial land look like? And how do you go about finding those people? And, I would want to get confident that there's enough of those to kind of sustain you for the next phase, because that does seem like a comparative advantage that you have.
Yeah, that makes sense. Thank you.
Yeah, thank you.
And I actually want to add on that, because David, when you're talking about the matchmaking for the community, and that's one of the key work we do. So we're in talk with Peña that if we can have some sort of pilot, because that's what makes community strong, to build a very connected one, and make sure the right people meet the right people. But yeah, so we have Cloud ID next. Tatiana, feel free to share your presentation.
Can you hear me?
Yes, all good.
Okay. Cool. Hi, nice meeting you all. I had some problems at the beginning with the sound, but now I can hear you.
Oh, perfect.
Okay, cool. Okay, just give me a second. Okay. So I'm gonna start with a short story about Kim, the owner of a flower shop. She knows that she's gonna have some flowers, so she would like to offer to special clients. But first, she doesn't know who the special clients are. And second, she doesn't have any way to connect with them, because every transaction Kim has ends up in a piece of paper that we're throwing away. But what is the real problem? We really need to understand more our customers. That's what the merchants want to know. How do they behave? What do they buy? By the lack of 360 customer insights. On the other hand, if we look at medium and small businesses, they don't have access to loyalty programs because they're too expensive or too complex. So we're here to change that. We're Cloud ID, a customer engagement SaaS platform that converts the end of a transaction into the beginning of a relationship. But how does it work, you might ask, because it looks pretty awesome. Basically, Cloud ID is easy to implement. In 5 steps, in less than 5 minutes, the merchant can start using our solution. At the moment that they start using it, they're able to send digital receipts through SMS and through the app to their customers. So that will help them to understand how do they behave, but then also that they will be able to connect with them. So now Kim is able to send that message to their customers, saying if you come today, you will get some discount or some flowers for free. If we look at the market, we are in one of the fastest growing sectors. We are sitting also, we are focusing today in medium and small businesses, where we have in Sweden 275,000, over 60%, and we expect to be in 6,000 over the second quarter of the year. But how do we go to market? What's the strategy? Do we work with partnerships with point of sale suppliers? Because they already have customers, so we can grow faster, but also it's something they want to offer them, but they don't have the possibility to develop it because they need to focus on the core. So they can offer us a solution as an add-on of what they already have. We still go one-to-one with merchants to understand what their needs and what they're paying, but our focus is the partnerships with suppliers. We have seen a great interest, so we have already signed 7 POS partnerships. With, I would like to highlight the ICG partnership, which is they're present in 70 countries, so will help us to grow faster. This is our traction today. We have over 200 customers, and we have issued more than 6 million receipts through our platform. That means that we have data of over 6 million transactions. If we look at the competitors, what we differentiate, we don't really have that. We have 2 direct competitors, Sleep and Receipt Hero, which they are doing pretty much the same. However, our solution is very easy to install and it doesn't require any development costs. That's why it differentiates us. We have lowered the threshold to be able in as many places as possible to develop a universal solution. So whatever is accessible, very easy to install, no implementation cost, and very easy to use. Scalable, we don't have any country barriers, and we are unique because we are converting a paper receipt into valuable customer insights in an anonymous way. This is the business model, is B2B subscription model. We have defined 3 different plans where Stratus and Nimbus are focused for medium and small businesses, and Cirrus for bigger retail chains. Well, here we will talk more about predicting smart data insights. The team is a high experienced team, very passionate about technology, sustainability. We some more than 40 years experience, and we speak 7 languages. It's a very diverse team that we have today. This is our ask, 600K euros. Basically, it thinks that you are here because we are going to use the money for growth. So we're focusing on business development, marketing, and just basically to achieve the critical mass we need. Now, this is Kim, very happy using our solution as she can connect with her customers and can understand what do they really need. Thank you very much.
Thank you so much, Tatiana. I mean, my first reaction is that the traction slide is super impressive, especially because it looks like a lot of that traction came during the past 2 years, like during COVID, right? And you're selling to, my understanding is you're selling mainly to retail, customers. So I mean, it's just amazing that they were, engaged enough and able and interested to buy from you guys during that time. So anyway, that's crazy. Congratulations on that. That's really interesting. I think the main question that I have coming out of this is, well, actually there's 2 questions. One is, I want to go one layer deeper on the traction, and we don't necessarily have to do this now, but one thing I'm interested in is, of those 200 some odd customers, how are they geographically distributed? What types of companies are there? How did you acquire them? That kind of thing. So I would want to dig into that. One reason why is I've seen a lot of companies targeting retail, and I feel like the lesson that I've learned from talking with a lot of entrepreneurs in the space is that, the first like 100 or 2 can be quote unquote easy, not actually easy, but like they, you know, can be simpler to get the first like 100 or two, because it's a lot of people who are kind of telling their friends, and it's like within a kind of like one network, right? But then figuring out how to go from 200 to 2000 to 10,000 is just like step level increasing complexity. So I'd want to kind of understand how you started thinking about that. And then the other question, which you can, you know, I'd be curious for your answer now, is, you know, how do you see the, like, I think the competitor breakdown was interesting, but I'm curious how you see the product expanding, and do you see yourself kind of, are you going to run into other competitors? Are there, and what's the status quo right now? So what are people currently using for this? And what, you know, who are you taking budget away from? And then where do you see the product expanding into? What kind of features do you see it expanding into?
Yeah, so I can start answering the first question about the growth. There is the way that we have built the strategy. It's towards the partnerships with point of sale suppliers. So basically, it's some solution they were trying to get, but then they don't have the time, they don't have the efforts, they don't put the effort because they need to focus on the core. So when we talk to them, they are they're like, okay, we can actually offer something without any development costs. And also they are supporting us to sell our solution. So basically they sell it for us as an add-on of what the customers already have. So it's much easier because they already have the trust, they already have the relationship, they have the connection. So it's much easier to go in that way. So that's why it's, I mean, the growth that we actually expect now is going to be faster, basically. But also when it comes to the comment about how did we manage to do it during the pandemic, is because we changed it a lot. The strategy has changed many times, of course, as you might know. But then we realized that we need to offer something that was solving a problem. So we actually divided the product in steps. So first, we only offer the possibility to digitize the receipt. And that was not expensive for them, and they were reducing costs for paper. So that's what, I mean, we're offering something that they were supporting to reduce the cost, not to add it. And then, because we believe, okay, we have as a first step, we just need that digitization or to save the receipt. And then the second step, it's we implement the loyalty program. So that's happening now, where they are more stable. So that's why we're able to grow. Yeah. So we needed, yes, exactly. That's the first question. And the second was about.
Oh, I was asking about the, but I know we don't have a lot of time.
Yes.
I'm sorry. We'll catch up another time, Tatiana. Sorry. Yeah. Jenny, go for it.
Yes. So we have David. Yes, you can start presenting. Awesome.
Okay, cool. Oh, David, I can't hear you.
Sarah, sorry. Now I got it.
Yeah, we're good.
Sorry. Okay, we'll try it again. Okay, share a little bit of information on the Lementary company. We're a true B2B enterprise company focused on the sales process and the buying experience process. So a little bit of the history. We're standing here. I mean, we started around about when you moved to London 2 years ago. I asked myself, this pandemic, what will it make our company? It just started. So actually it accelerated in the right direction, and trajectory is quite awesome. Looking at what's happening in the world, we see there is a complexity of really doing sales and international sales in particular, and an organization that are rather complex. We have a business that is now run with omni-channel kind of approach, that you have digital and physical channels. You have a very transparent information need between all the parties. So actually, my background is a management consultant working with digital strategies from Accenture, amongst others, working with an APB before. So looking at a strategy, if you want to have a sales growth or top line growth, how to really address that in a manufacturing company. And actually sales reps are representing 80 or 90% or more of the sales revenue. The e-commerce is not more than like 5 or 10%. So in order to address the top line growth, you have to focus on the sales rep. Looking at the situation today, I mean, a sales rep is having a darn hard life. They're having sales managers. They want to report in CRM in order to have a predictability or forecast produced. They have a marketing department producing a lot of information, material, collaterals, in order for them to have a branding in the proper way of showing the products. Product managers explaining all the new features and the new products, pricing, and the sales team, of course, how to collaborate between the sales team. I mean, there are different dimensions of if it's industry, is it product, or is it a region that you want to collaborate in. And of course, the sales guys, they have a lot of different systems. You approached it before, David. There are heaps of systems out there, and they're pretty advanced sometimes. And the CRM is there. The incentive of using a CRM if you're a sales rep is not really there, because that is all about reporting to the management team. So there are always heart of rollouts of the CRM systems out there. We know that. Their configuration tools, their PIM, product information, they're quite advanced there. And adding the information you got there, they're plenty. And a sales rep today is more than one day a week just looking for the right information. What kind of product is there? The right version of the product, the right pricing of the product, the latest product launch theme, etc. So they're pretty hard life for the sales rep. And just looking at the customer, I mean, if the customer today is going to buy a product or service, there are quite a many of stakeholders internally. There are at least 10 for each and every buy. So just to inform them, to keep them informed is a work itself. And there are a lot of studies showing that it's more important for a customer to have relevant information each and every touch point. If it's physical or digital, doesn't matter, but it's more important than the actual product or the pricing. So it's actually premium discussion here we're talking. And looking at the discussion.
Sorry, David. It's almost 4 minutes.
Okay, sorry. So we have a problem today. They were living in different worlds. They are communicating in the old-fashioned way. So what we really need is having one kind of a digital sales room here, a digital deal room, in order for them to really collaborate, to share, to have iterative sales process, to really support them with all the information they need, all the kind of communication and the system, in order to keep the stakeholders informed. This is quite an advanced process that it has to be kept alive. Our product is taking one unique position in the digital landscape, just consuming the data from everyone else. So we're not competing with anybody else. Very strong business case. We're top line sales growth. We are effectiveness, not efficiency. We have chosen the enterprise level, manufacturing industry, global companies. We have Tetra Pak and Alfa Laval today, 3-year plus contracts. We have a product that's up and running out there, pretty advanced. We have bootstrapped ourselves, so we've been living with a good cash flow. And now we're looking for advanced to go into the next level of acceleration of go-to-market. It's two founders. I'm an old management consultant and the old technology guy. Sorry, looking for $2 million.
Oh.
Thank you, David.
Gotcha.
David, you have time for one question. Sorry.
Yeah, of course. So I think my question would be, so I've seen a lot of companies in this space who are trying to like digitize the sales process in some way. But you guys have some really interesting traction and and I like the fact that you're kind of focused on a particular, right, manufacturing, multinational, like maybe there's something unique, a unique workflow that you can take advantage of, right? I think my concern with all of these products, based on my own experience, is if you're a buyer of software, like the last thing you want to do is remember to go to some random portal to have to deal with the sales process. Like you're just going to, what's the lowest effort thing you can do?
Mm-hmm.
You just email the AE, right? Like just they'll answer whatever question you have, just email them, they'll figure it out. So that gets to my question, which is, you know, how have you kind of de-risked that for yourself? Like, have you kind of, do you have any proof points that sellers are engaging in the product, or you're able to like improve, you know, conversion rates or something? You know, like there's some engagement. Yeah.
A really relevant question. I think we're taking the next level of kind of sales tools in order. We're dealing with the presentation very much on the interaction with information, and have one deal room. You can use email. We have that as a communication, because notifications are usually met in email, as you say. Just a quote from a sales guy: I want to work in Lumentric because the CRM sucks. This is intuitive. This is where I interact with my customers. I produce information, goes down to the CRM. I have one intuitive interaction with the client together with my reporting. So it's a pretty simple day-to-day tool in that order. We don't force them to work. We are just an addition, but simplifies their lives. The customer likes it.
Yeah, thank you so much, David.
Yeah.
Really looking forward to Nancy. Feel free to start your presentation from AliHop.
Hi, hello, David and everyone else. Nice to see some of you. I haven't seen you for a while. Hi, nice to meet you. Yes, I'm the co-founder and CEO of AliHop, and I will share my screen now so I can present. I've shortened the pitch a lot for today. Usually, you know, it's a lot of information on, but I thought I'd make it a bit shorter today. So,
okay, cool.
Let's see. Just a moment. I'll do it like that. Okay. So, AliHop is the first green travel booking platform for corporates, and we've put together a really senior team in order to be able to scale up fast. The team consists of myself with startup experience and B2B sales experience. I've run a few startups before and been selling a lot. And my co-founder, his background is at Eurostar as director there, and for SNCF also director for leading the high-speed train growth across Europe. We have the current COO of Citymapper on board, and the previous vice president of SAP Concur, and also a manager from Ambex Business Travel. We're, as you can see, a very diverse company, so that's something very important to us, and I've read is something also quite important in order to be successful as a team. We actually started out as a B2C tool, but we got so much demand from the B2B market crying out for an all-in-one place, convenient place where they could compare and actually book all sustainable travel, including trains and buses and micromobility like e-scooters and carpooling, bikes. The B2C market in mobility is super saturated, and competitors are only really selling their own products, such as Uber or the train companies or the travel agencies. They're not good at selling anything green. They're just really pushing flights and car travel. Of course, you might think that travel is low compared to pre-COVID, but for train travel, it's actually back to 85% to pre-COVID figures, and micromobility is absolutely booming in cities, but employees, they just can't access it via their employers. The flights are becoming about 50% more expensive with high energy prices, and companies, they're very desperate to travel in a new sustainable way. So it's a perfect timing for us as a new player to enter the market. They also really love that we integrate with their flight and hotel booking tools. This is what our platform looks like. The left side is the get there for long distance travel, and the get around is for city travel, wherever you happen to be. We are rolling out with 2 well-known organizations. I can't show them here due to NDAs, and the pilot is ready. The employees can self-book with dream features that we think as B2C customers are really something we expect, but in the B2B market, they're so lucky now that they can book to sit next to the person they want. They can book to sit where they want on the train. They can order food, and they can actually cancel and exchange their tickets very easily. We also do CO2 gamification in order to shift behavior. Some quick key facts. It's a 4 billion market for ticket sales. We target 400 million euro ticket sales turnover in year 2027. And we aim to be the largest green travel partner for both business travel agencies and for corporates. We are raising 1 million to go into several European markets. And we've had requests already from Asia and America. And we received several nominations and awards. Okay, I'm ready for questions.
Awesome. What the types of customers that you're working with so far, that you're starting to work with, any themes across them, the types of companies?
So it was public companies and or organizations and private. So the ones that we're working with now, so when we say, we get one customer, we basically get 20,000 users because they all need to travel sometime. So not all of them are frequent travelers. Some of them travel a lot more. Like we have one of the biggest IT companies in the world who's joining with us now. And in Sweden, they have about 2,000 people that travel frequently. We have another big company with 28,000 employees. And we're starting with a council as well. And the councils, they really want to push their own public transport solution. So it's extra important for them that their employees can easily access it.
Right. Interesting. Well, and the other question that is top of mind, and then I'll stop, is because I think we're behind, is there's part of me that thinks, should this not just be a feature of existing booking platforms? Like I log into Trip Actions and I'm able to see my CO2 emissions, and I'm able to book filter for like green travel options or something. I don't know. So I don't know if that's possible. So anyway, that's like my cynical take. So convince me why I shouldn't be cynical.
In the long run, we do aim to sell to one of these companies because they really want this. But my co-founder is here. I think you can answer that question quite well, Bertrand. Do you want to do it?
No, clearly. Hello, everybody. No, clearly it's crucial, and we have a project to integrate plane and hotels. We plan to do it in 2 years' time, but we've been approached by a travel management company in Norway who say it's very important you do it. But for us, what is very important is not only to calculate CO2 and make a dashboard, but also to give access to the green trips. And at the moment, you can go in any travel agency. It's very hard to get all the feature you need for a train ticket, and you will never have access to public transport or urban mobility. So it's a mix of, we need to go give access to green modes and nudge behavior at the same time.
Gotcha. Cool.
Super nice. Thank you for everybody. And we're just going to take a screenshot of everybody. So if you can smile, it's a little bit hard to smile on request. But I think it's done, right? Yeah, it's good. Awesome. But this is coming to the end of our webinar. And David, thank you so much for your time. But
thank you.
And we just have a few words from Martin from Invest in Skåne. Why should a global investor like David pay more attention to southern Sweden?
Well, of course, you've heard today, we have so much creativity, so much innovation, and not only that, but we have innovation with an agenda in terms of sustainability, in terms of green transition, in terms of trying to piece by piece by enterprise actually changing the world into a better place. And of course, these are some of the companies, but we have so many ideas and so much creativity bubbling in the region. I think it should be quite interesting for an investor to find the kind of, like you talked about before, the next solutions. Might be crazy ideas, but they might fly. So we're all in this together, and we're trying to put our companies into the equation.
Thank you, Martin. David, we have one last question, because in your Angular weekly newsletter, I highly recommend everybody to subscribe. You talked about the fundraising landscape is getting harder and longer in 2022. So what do you think are the reasons, and how founders today should be prepared for that?
Sure. Yeah. So very quickly, because I know we're at the end. I think that the reasons are it's a trickle down from late stage and public markets. So the late stage investors that we're talking to, they all have portfolios that have been that look like they're worth way less now than they looked 6 months ago. So that's getting them nervous, and they're investing, they're pumping the brakes, they're investing less, they're rethinking their approach, right? And so that slowly trickles down because ultimately, early stage investors, we're a little bit shielded from that, right? Like we're years away from ever talking to late stage investors. There's a long journey between where we all in this room are now and starting to work with them. But it slowly trickles down, right? So there's a lot of people that see that and they're just a little bit wary. So I think there's, if I were a founder, the way that I would think about it is I should reset my expectations. Like if in 2021, you thought that there was a certain, it was going to take you X number of weeks and you were going to get Y valuation, maybe just, increase the amount of time, lower the valuation a little bit. You might still get to what you thought you were going to get in 2021, but just change your expectations a little bit. Because I think there's a lot of this uncertainty and wariness in the market, and the result of that is people just slowing down.
Thank you so much, David. And the one final thing is that how should the founders reach out to you?
Oh yeah, so you can just email me. My email's all over the place. I'm an open book, so it's david@angularventures.com. Feel free to email me anytime, and yeah, we're really excited to invest in Sweden, to be perfectly honest. So we don't have a portfolio company from Sweden yet, and we are ashamed. So we're really excited to invest in the region, and thank you so much for having me.
Thank you for everybody. So this is the end of the webinar, and have a nice afternoon. Thank you.
Great. Thank you.
Thank you.